I'm going to show you guys how mortgage rates work, then all the economic news behind them, and what I think is going to happen in the next few days, next few weeks, and even months ahead. So let's get back to Goldsby.
So really what you're talking about, Austin, sounds to me like a debate about timing. You think we ought to get there, which is lower rates, but the speed with which you get there is the one that you seem to be arguing with. Do you see rates lower at the end of this year than they are right now?
I do, but it's a little more than just timing. We must get convincing evidence, as I say, that prices and inflation is going back to 2%. And even in the latest CPI and PPI numbers, there's some that is encouraging, but there's some that are still warnings. So the best thing about the recent inflation numbers we got are that the impact of tariffs on inflation, maybe it's easing as we want it to, that would just prove to be transitory and goods inflation would go back down to where it was before this started. The disturbing part was if you look at non-housing services, that inflation is not yet under control. And we've had some discouraging signs, healthcare inflation and others that I don't need to tell every people can look and for themselves and see that the price of these services, when you got inflation in that running over 4% at an annualized rate, you still got some work to do.
So that is officially from the president of the Federal Reserve in Chicago. So he's thinking, okay, the employment numbers aren't so bad. You got to check out that full interview. And then he comes in and says inflation, that's the stickiest part. And the worst part about it, it's healthcare. Okay, so maybe today there's some healthcare things rumbling around with the Trump administration. But let's get over to now how rates are going to be based on this, because he's coming out saying, okay, well, maybe the economy's okay. Maybe we don't have to cut rates. So let's go over to rates and see what they did for today's